How Jesse Livermore Made $100 Million During the Great Depression. Chapter 1, The Boy Who Read the Tape. The year was 1891, and a skinny 14-year-old boy named Jesse Livermore sat in a cramped bucket shop in Boston, his eyes glued to the ever-ticking numbers on a chalkboard. He didn't have money to trade yet, just curiosity, sharp instincts, and an uncanny gift for observation. Each flicker of price, each rise and fall, told him a story others couldn't see. He wasn't there to gamble. He was there to learn the language of the market. And as the numbers danced across the board, Jesse began to read the rhythm of greed and fear, the heartbeat of human emotion turned into numbers. He would rush home after work, notebook in hand, recording patterns. He noticed that when stocks hit certain highs, traders grew euphoric. When prices dipped, panic followed. The tape, he whispered to himself, never lies. By 15, he made his first real trade. He walked into a local bucket shop, a kind of mini brokerage where people bet on stock movements, and placed a small wager on a stock he believed would rise. It did. He made $3.12 profit. To most, it was pocket change. To Jesse, it was proof that his system worked. He began trading regularly, always relying on observation, never on tips. His small winnings grew into hundreds, then thousands. The local shop owners banned him eventually. He was too accurate, they said. Too consistent. But Jesse didn't stop. He moved to bigger cities, bigger shops. New York was calling. When he arrived on Wall Street, he was just 23. Yet he had already made and lost several fortunes. He was known as the Boy Plunger, a fearless speculator who bet big and won bigger. He wasn't driven by greed but by mastery. He wanted to understand why markets moved, not just how. By 1907, his instincts paid off spectacularly. While most investors were celebrating a booming market, Livermore saw cracks forming. He started shorting railroad stocks, betting they would fall, and when the panic of 1907 hit, he made millions. J.P. Morgan himself reportedly asked Livermore to stop shorting because the market was collapsing too fast. That moment sealed his reputation. He was the man who could predict crashes, the trader who thrived when others drowned. But Jesse knew every fortune in the market had an expiration date. There is nothing new on Wall Street, he said. There can't be, because speculation is as old as the hills. He lost millions again after 1907, bad timing, too much confidence, but he learned. His failures became his greatest teachers. He rebuilt his system, relying less on emotion and more on patience. By the roaring 1920s, America was unstoppable. Automobiles filled the streets, jazz filled the clubs, and stock prices soared like never before. Everyone was getting rich, or thought they were. And Jesse Livermore, older now, more disciplined, stood quietly on the sidelines, watching the frenzy grow. He studied price movements day after day. Beneath the surface, he saw weakness, momentary hesitations in powerful stocks, subtle patterns of distribution. The smart money was slowly getting out while the public poured in. To most, it was invisible. To Livermore, it was a red flag waving in daylight. So, quietly, he began to act. He started shorting, betting that the market would fall. It was an audacious move in an era when optimism was law. "You're crazy," one broker told him. "You can't fight the market." Livermore simply smiled. "I'm not fighting it," he replied. "I'm reading it." As 1929 arrived, the market reached fever pitch. New York glittered like never before. Millionaires threw parties with champagne fountains. Newspapers called it the new era. Economists claimed there would never be another depression. But Jesse Livermore knew better. He didn't just trade numbers, he traded human emotion. And the emotion he saw everywhere was greed, swollen and blind. He tightened his short positions, betting against blue-chip stocks, U.S. Steel, General Motors, and others that seemed untouchable. He waited patiently, sometimes pacing in silence, other times standing before the ticker tape like a general reading an enemy's movement. Then, in late October, the first cracks appeared. Prices stumbled. A few stocks faltered without warning. Brokers brushed it off as a minor correction. But Livermore saw something different. He saw the great machine of confidence begin to break down. On October 24, 1929, Black Thursday, the market trembled. Panic spread. Phones rang endlessly. Brokers screamed. Prices fell faster than anyone could comprehend. As chaos erupted across Wall Street, Jesse Livermore remained calm, silent, composed. The very storm he had seen coming for years had finally arrived. And while the world watched its fortune vanish, Livermore was about to make his. He saw signs the public ignored: too much margin debt, reckless optimism, wild speculation. The market was turning into a bubble, and Livermore could feel it in his bones. While the newspapers shouted, "Prosperity forever," Livermore began to prepare for something else. Something darker. He wasn't just reading the tape anymore. He was reading the soul of the market. The stage was set. The world danced on the edge of a cliff, blind to the storm that was about to hit. And when it did, Jesse Livermore would make one of the greatest fortunes in financial history, by doing what no one else dared to do. He would bet against the world. Chapter 2: The Gathering Storm. The late 1920s were an age of glitter and illusion. America had never felt richer. Radios crackled in every home, Ford cars lined the streets, and Wall Street was the new gold rush. Ordinary people became investors overnight. They didn't study markets, they followed the crowd. Stocks only went one way, up. Or so they thought. To Jesse Livermore, the madness looked familiar. He had seen this movie before, and he knew how it ended. Every market boom carries within it the seeds of its own destruction. The louder the celebration, the closer the crash. From his office on Fifth Avenue, he watched the frenzy unfold. The ticker tape printed endless new highs, and men cheered each one as if it were divine proof of their genius. Companies with no earnings were valued higher than industrial giants. Even shoeshine boys gave stock tips. Livermore called it the sound of the crowd losing its mind.
Chapter 3: The Crash of 1929. October 29, 1929, Black Tuesday. The air on Wall Street was thick with panic. Brokers rushed through crowded hallways, their faces pale, their voices cracking as they shouted prices that changed by the second. The ticker tape ran hours behind, no one could keep up. It was chaos, pure, financial chaos. Jesse Livermore sat quietly in his office, watching the numbers roll across his ticker machine. Outside, New York trembled. Men who had once bragged about their market genius were now clutching their heads in disbelief. Some wept openly. Others simply stared in silence, broken by the realization that everything they owned was gone. For years, Livermore had prepared for this moment. While the world bought into dreams, he bought insurance against them. His short positions, bets that stocks would fall, were now exploding in value. Reports poured in. U.S. Steel, once a symbol of industrial power, was collapsing. General Electric was down 40%. The mighty Dow Jones was in freefall. Billions evaporated in hours. Livermore didn't cheer or gloat. He knew the cost of panic too well. "Never hate the market," he once said. "It has no heart." To him, this wasn't victory, it was proof of the cycle he'd always warned about. Still, the numbers were staggering. Each passing minute, his brokers confirmed profits beyond imagination. The positions he had built quietly over months were now paying off like an unstoppable wave. He called his assistant, gave calm instructions: begin closing positions. Lock the profits. While crowds gathered outside the New York Stock Exchange, desperate for news, Livermore's account ballooned. By the end of the day, his paper profits had soared past $100 million, a sum that would equal several $billion today. His wife, Dorothy, later recalled that when he came home that evening, he didn't look triumphant. He looked tired. She asked softly, "How much did we lose?" Livermore smiled faintly. "We didn't lose, Dorothy. We made the biggest profit of our lives." But even as he said it, he knew the victory came with a shadow. Across America, factories were closing. Workers were losing their jobs, families their homes. The dream of endless prosperity had vanished overnight. Livermore's fortune had come from understanding that greed always ends in fear, but that truth didn't make it any easier to watch millions suffer. The newspapers called him the Great Bear of Wall Street. Some hailed him as a genius who foresaw the storm. Others cursed him as a villain who profited from disaster. Yet Jesse Livermore hadn't caused the crash, he had simply seen what others refused to see. He didn't celebrate. He knew markets were cyclical, and what rises in triumph can fall into ruin. But for that moment, amid the rubble of the financial world, Jesse Livermore stood alone, the man who had read the market's heartbeat so perfectly that he made history from its collapse. And history would never forget his name.
In the aftermath of the crash, Wall Street lay in ruins. Fortunes had turned to dust, and the once booming trading floors now echoed with silence. Yet, amid the wreckage, one man stood untouched by the panicked Jesse Livermore, the trader who had turned catastrophe into one of the greatest financial victories in history. Reporters called him the Lone Wolf of Wall Street. Others whispered his name with awe and resentment, but Livermore didn't bask in fame. He withdrew from the spotlight, focusing instead on reflection. He knew that surviving one crash didn't mean conquering the market, it only meant he had outlasted the crowd this time. Livermore's philosophy was simple but brutal. The market is never wrong, opinions often are. He believed the key to wealth was emotional discipline, not luck. To him, trading wasn't about predicting the future, it was about reading the present better than anyone else. In the early 1930s, while most of America struggled to rebuild, Livermore studied the psychology of investors. He noticed how easily people forgot pain. Just a few years after losing everything, they were eager to gamble again. Greed, he realized, had a short memory. He kept meticulous journals, recording every thought, every trade, every mistake. "Speculation is as old as the hills," he wrote. "Whatever happens in the stock market today has happened before and will happen again." To Livermore, history wasn't a collection of events, it was a pattern repeating through time. He understood that success came not from following others but from standing apart. When the world was greedy, he grew cautious. When the world panicked, he grew bold. That was his rhythm, always against the tide. Yet being a contrarian came with a cost. The pressure of massive trades, the isolation of being misunderstood, and the burden of managing vast sums of money began to weigh on him. The market demanded everything: time, focus, emotion. It could lift you up one moment and crush you the next. Still, Livermore's methods became legendary. He studied price action long before it was popular. He believed charts were a mirror of human behavior, and he trusted them more than any analyst's opinion. "I never argue with the tape," he said. "Markets are never wrong, traders are." Books and newspapers immortalized his story. Young traders looked up to him as a mythic figure, the man who could feel the market's pulse. His 1929 triumph became the ultimate tale of foresight and courage. But Livermore remained humble before the market's power. "There is no easy money," he warned. "The market gives and the market takes away." He had become more than a trader. He was a philosopher of risk, a man who understood that winning wasn't about being right, it was about surviving long enough to be right. And though his fortune made him one of the richest men of his time, Jesse Livermore's true wealth lay in his wisdom, that in the chaos of markets, the greatest battle is against self. Chapter 5, The Final Lesson. The 1930s rolled on, and Jesse Livermore, once the richest trader in the world, found himself walking a lonely path. The Great Depression had changed everything. The world he had conquered was now weighed down by fear, unemployment, and hunger. Yet even as millions struggled, his name remained a symbol of brilliance. He was the man who had seen what no one else could see. But behind the legend, Livermore battled his own storms. Wealth had brought him fame, but not peace. The market that had once been his ally turned unpredictable, ruled by government interventions and new regulations that disrupted his methods. His flawless system began to falter. He lost millions in the early 1930s, not because he forgot how to trade, but because the world itself had changed. Markets no longer moved purely on emotion. They were now shaped by policy, by politics, by forces he couldn't read on a ticker tape. Friends urged him to retire, but Livermore couldn't stay away. The market wasn't just his profession, it was his identity, his addiction, his art. Every morning he still rose early, studied the papers, and analyzed the price movements, hopping to regain the rhythm that had once made him unstoppable. He wrote a book in 1939, How to Trade in Stocks, hopping to pass on what he had learned. It wasn't a book of formulas, it was a book of principles. In it, he warned readers about the greatest danger of all, themselves. A man must believe in himself and his judgment, he wrote, if he expects to make a living at this game. That is why I don't believe in tips. His words became gospel for traders around the world. They realized Livermore's genius wasn't in predicting prices, it was in understanding people. He knew that fear and greed ruled every chart, every candle, every crash. By 1940, the legend of Jesse Livermore had faded into myth, but the lessons he left behind only grew stronger with time. Traders studied his rise and fall like scripture, extracting timeless truths from his victories and his mistakes. He had taught the world that markets move in cycles, boom to bust, euphoria to despair, and that only those who can stay emotionally neutral survive both. He taught that patience was more powerful than prediction, that waiting for the right moment mattered more than chasing every move. And most of all, he taught that success comes not from fighting the market, but from understanding it. In the end, Jesse Livermore's story was not just about money. It was about human nature, how emotion drives every decision, and how discipline can turn chaos into opportunity. He made $100 million when the world was collapsing, not because he was lucky, but because he saw the truth hidden beneath the noise. To this day, his name echoes through trading rooms and financial books as a symbol of mastery and warning, a reminder that even in the darkest markets, wisdom shines brightest. And so, the legend of Jesse Livermore endures cannot as a tale of wealth, but as a timeless lesson. Those who understand the crowd need never fear it.